A very warm welcome to this esteemed panel. Thank you everyone for being here. Your valuable insights, I'm sure, shall warm up the audience from their post-luncheon lethargy. Thank you, sir. Moving on. In data center industry, capital today is not only chasing the demand growth, but it is also evaluating power access, execution capability, scalability, and the readiness of digital infrastructure. In this session, we would like to discuss where and how the capital is moving today, what is giving the investor confidence, and how the financing decisions are being made. My first question is to Mr. Ganesh Sankararaman. Sir, Sify launched India's first commercial data center, and today it is also one of the most diversified data center portfolios in India. What are the funding strategies that has been deployed for expansion by the group from time to time, including your recent listing initiatives?
Good afternoon to all. Thank you for inviting me for such a wonderful discussion and with the great panel members. Yes, Sify has been in the business for the last 25 years. We have 26 years, we can say. We have started in the year September 2000, the first commercial data center by Sify. We have been following some funding discipline since the beginning because data center requires 4 layers of investment to be made. First layer is on the ground, which is land. Second investment would be on the building. Third investment on the power infrastructure. Fourth investment will be on the fit-outs or pods. If you look at all the four, there will be a mechanism to be followed. All investment being made on land being made by way of equity. In the case of building and fit-outs is going to be with the banking channel. Banking channel will be taking at 65% of borrowing and 35% of equity net. And we'll be using that requirement based on when the actual investment is going to be made. One of the important aspects one has to take into account is that first financial closure will be made before constructing the building itself. Because we should not be ended up with asking for loan after starting the construction. So before construction, we'll be closing the financial closure. And the longevity or tenor of the instrument also will be fixing much earlier. The tenor could be earlier, it was about 4 to 5 years. I'm saying before 2019. After that, like the government has classified a data center under infrastructure. So basis will be getting longer period of tenor from banking itself, from 8 to 10 years of time with the 2 years of moratorium. So we are fixing both the quantum to be made and also the tenor in the beginning itself. So funding strategy will be made and the drawal will be made based on the actual expenditure being incurred. See, in the case of construction will take about 18 to 24 months of time. So that we'll be drawing money on a periodical basis. Once construction gets over, at the point in time, we'll also go for power infrastructure. Power infrastructure would be about 5 to 7% of total project cost. We'll also be making purchase order while construction activity is going on. Once construction is over, then we're also investing on the fit-outs. Fit-outs will take about 6 to 8 to 12 months of time. Now, there are some long lead items where we have to necessarily do it while construction is going on. After that, we can cover and the entire fit-outs would be ready. Then basis on customer requirement, we'll be covering fit-outs on each floor base. Here, land will be on equity. All other investment will be made at 65-35. And drawal will be made based on the actual expenditure being incurred. And customer engagement will be made. Once customer signing being made, we'll be incurring on the fit-out cost. Fit-out cost is about 65% of the total cost. Significant amount of cost will be incurred closer to the customer engagement. So basis on this parameter, we'll be able to manage the total funding and tenor and drawal. Everything will be completed before starting the project itself.
Sure.
That is the funding strategy. And there are two things. One, I am talking about pure play data center players where GPUs and CPUs are not invested by the company. It is being invested by the customers who is going to occupy the data center players. So only those cases I am saying. And there are some small data centers also there, like edge data centers, where we'll be incurring the cost at upfront in day one itself, because construction itself will take about 9 to 10 months of time. And then other infrastructure is also being made after we go into the construction of edge data center. These are all the major funding strategy we are following.
Thank you, sir. Quite useful, sir. Moving on to Mr. Mukesh Soni. With the rise of consortium-led investments, including your own, where digital connection brought together multiple global investors, what is fueling investor confidence in India's data center sector today, sir? And how are investment strategies evolving to capture the long-term value?
Sure. First of all, thanks for having me over here. Thanks, Shveta, for that. So, very exciting times. You have seen that if somebody is closely monitoring this sector, last 20 years, India has developed capacity of 1.3 gigawatt. What we are seeing now, or what has been announced, that in next 5 years, around 10 plus gigawatt will come on board. So definitely this is global capital which is funding this kind of requirement of close to $100 billion. So this is not Indian capital at all. And global capital always look for places where they feel that there is a business case. They can go to Latin America, they can go to Africa. Why they are coming to India? Because there is a purpose behind it. So there are a lot of factors which is proving why the capital is chasing this opportunity in India. First of all, the AI is real. That the training modules and the use cases have been proven. So people are actually implementing the AI strategies in India. They are building capacities for that. Data localization, which is a government initiative, is another factor that why you should have a data center in India. So it is coming slowly over a period of time that we generate 20% of world's data, but we are able to store only 3% of that. So of course there is a gap within the Indian data requirement. Third would be a lot of government push. Why I say government push is that the user of the data center has got a 20-year tax incentive on whatever they will earn using the Indian data center for the global clients. Amazing thing. That's why all the hyperscalers are willing to come to India and do whatever is required. Then the fourth thing I would say is that talent availability and the infrastructure that India provides. So what India provides, that for a data center you need power. So power infrastructure you will not get in many countries. Of course, China is there, but not many people want to go to China. So India scores on the infrastructure availability as well, which is power in a bigger way. So we are able to provide both brown power and green power in a very good way that it will get developed along with the data center. So these are the 5-6 elements which are like attracting every capital provider in the world that why not go to India and look into data center. So today the global the private equity funds or the bigger corporates, they are announcing capacity after capacity every month that why you should do a data center in India. Of course, it will take some time to stabilize, but these are deep pockets. This is patient capital. You will not see return in 1 year, 2 year. People will see the churning of portfolio also, that how to do the exit from the Indian market. Other sectors have seen the exit. We will also see that the data center company will go IPO. They will get into a REIT, InvIT. There will be other kind of exit mechanism which will work out. So there is money to make, but we have to see when the realization happens. Today we are in an investment mode, and definitely there is a case for that.
Sure. Thank you, sir. Moving on to Mr. Devesh Sharma. Sir, ICICI is one of the India's largest private sector banks. It also has respectable exposure to data center sector. What are the key financial considerations that the financial institutions are looking for before backing data center investment, which are generally considered as high-risk investments by them?
Firstly, thanks, Shveta, and thanks for inviting me. And thank you, everybody, for giving such a patient hearing. I think ICICI Bank, being a pioneer in digital banking, very early in the cycle, we realized the type of digitization which was happening of Indian economy, the type of data which was getting generated. We saw very early in the economic cycle, we realized that the data boom has already started happening. And the way the entire economy, the way, whether it was retail, whether it was corporate, It just probably started from demonetization, and maybe the real thing happened once the COVID happened. So you had the entire economy moving on digital side. And as a bank which sort of becomes one of, data is the biggest sort of oil for us, data is the biggest raw material for us, we sort of went back to our table. We formulated a framework. So that was a framework because what we realized with so much of data coming, you will also have a lot of data centers where this data is going to be stored. And there would be a lot of operators, a lot of key institutions will come and manage the data. So we built sort of a framework. So the key parameters of the framework was, first parameter was the ability to manage a data center. Because data center is heart of most of the organizations. So whether it's a financial institution, whether it's an IT company, whether it is a cloud company, anybody, I mean, tomorrow anything, X, Y, Z happening on data, the type of risk which happens is huge. For example, a decade back, the type of risk which used to be in a bank used to be the NPA risk and the capital risk, how much you raise capital. The way things have moved in a bank, the real risk happens is what is your technology risk, what is your operations risk, what is your fraud risk. So it's all linked to data. So first and foremost was the parameters we built to understand who are the people who are going to be managing the data centers, people who are, how in past they have done, what is their experience, what is the type of manpower, what is the type of engineering manpower they have, how they have built their data centers, how they have delivered the whole thing in past. So there was almost a decade of understanding how each one has built data centers, how they have done in past, and how they have managed the regulators in India, how they have managed the ecosystem in India. It was extremely important to have that comfort on the set of players who's going to do the data center. I think that was extremely critical thing. Second thing was obviously the location, how the ecosystem has got developed in terms of suppliers, in terms of power availability, in terms of water availability, in terms of land availability, in terms of approvals, the whole ecosystem. So how the whole place had got sort of developed. And that was one key factor. So one obviously was the player, one was the place. And third, obviously, one of the big things was who were the people with whom they were tying. So the type of hyperscalers or type of people, BFSI people, whom they were tying, and what is the type of contracts which were there. I wouldn't say not deep down the contract, but what is the base of the contracts? What is the type of tenor which was there? What is the type of, each of those things you try to understand. And what was the core of it? How critical the data was for those set of people. So whether it was a BFSI, whether it was an IT company, how difficult, how closely are they involved with the data center player in ensuring that the data center meets a particular quality. I think this was the three parameters. Then what rightly Ganesh said, you obviously have parameters like debt equity coming in. You obviously have parameters like how long the exposure would be. So those, in my opinion, were the outcomes. But what I would say is, relatively, if you look at the entire banking system, whether it is us or whether it's any other large bank, the understanding of data center, for which one should thank the data center players, has been pretty good with the banks. And I think that way, that's a stable framework on which everyone has been looking at lending.
Sure, sir. And it's quite valuable because we also believe this is a very sustainable sector because institutional capital has been the one constant this industry has witnessed. Moving on to Mr. Manish Gupta. AdaniConneX and Google have recently announced to jointly build India's largest data center hub. How are global investors evaluating India differently compared to other APAC countries?
Thanks, Shveta, for having me on board. See, we need to understand why someone from outside will come to India. For Indian workloads, yes. For the global workloads, why? So there are two, three aspects into it. One is first and foremost is the energy. While we talk about the Asia Pacific players like Australia, Japan, Singapore, they have almost 18 to 20 cents per kilowatt kind of energy rates versus 6 to 8 cents in India. Even the least comparable is Indonesia, which is out 7 to 8 cents. So first is the energy pricing, which is the least among all the Asia Pacific countries. Then second is the availability and the grid availability and the distribution network. I will just quote a very small example. In Thailand, Chonburi, there is a surplus of energy generation. It will take 3 years for them to connect Chonburi, which is the hub power generation to the data center hub locations because of distribution network. So there is a basic lacunas which needs to be mitigated in the other countries. Another point is the cost of construction. We were sitting in some London forum last week, and we were surprised that our 300 megawatt is equivalent to the 30 megawatt of construction in UK. So we are almost 1/10 of the global pricing. So energy pricing, the cost of construction, eventually the talent pool. Although talent pool is evolving, there are a lot of efforts in upgrading the talent pool in terms of the data center knowledge, acumen. A lot of association of AdaniConneX has been done in Singapore universities and the Indian, the staffing companies to educate and increase the talent pool of the Indian community. So I think these three factors are very pertinent, by virtue of which the global companies are eyeing towards India to host their global workloads. Last not the least, the government policies, wherein a lot of exemptions has been done from the sovereignty perspective. And while the DPDP exemption is applied on the global workloads. So in short, the commercial and non-commercial factors are quite feasible from India perspective.
Sure. Thank you, Manish. India's data center sector is now entering a next phase. From a capacity-led expansion, we are now talking about AI-led infrastructure investment. My second round of questions shall be focused on how the operators are adapting their financing strategies for the next generation AI infrastructure. What are the key risks involved and what are the reforms desired? Coming back to you, sir, how different are CapEx requirements for traditional DCs versus AI DCs?
There is no straight answer to this question because AI workloads are also having different types of requirement. But it would be about 15 to 20 crores of additional capex required for AI workload. And for AI workload, what is important is that whether the building itself is AI ready building. If the building is not being constructed for AI, then you cannot make AI related workloads to be operational in that building. So from day one itself, it is required to be planned whether you are going to have AI workload there. Second point is that you need to have the banking lines because, as I said, that in the traditional AI workload is going to be 65% of investment to be made out of borrowing. In the case of AI workload, it is going to be furthermore. It is going to be about 72% of total exposure. So one, we have to be very careful about how we are making the entire ecosystem ready so that we will not be buying the entire equipment and keeping it idle for a customer to occupy. So we should ensure that customer order is already available and time to market is very important. Once the entire infrastructure is ready, and it should be ready for consumer or customer to occupy and then start doing this. So that is an important one to have it. Funding is one part of it. Second one is how to make sure that there is no gap between infrastructure ready and customer occupancy. That is very important to have the continuous workflow because you are going to incur significant amount of capex. The capex has to be made in such a way that realization happens from day one itself. That is an important aspect.
Thank you, sir. Moving on to you, Mr. Soni. What are the financing mechanisms and funding challenges for AI data centers?
So like when we started say 20 years back, data center was of commercial building, so it was in real estate, so it was getting funded through a real estate mechanism. Now it has become infrastructure, so the mechanisms are very different, long-term funding is available. But just again repeating the number that if we are going to construct 10 gigawatt of capacity in next 5 years, we need around $90 billion of funding, which means on a 65-35 basis, around $60 billion of debt. Equity will come from outside or from the corporates, that's not a challenge. But the debt financing or any other financing will be a thing that the institutional banks, the other avenues of financing has to be looked at. So government is working on that, but there are constraints that we cannot take, say, a USD financing of debt because my customers are paying me in INR. So I am always doing the catch-up game and being in a loss situation. But you will see that over a period of time, the banks, both Indian and global banks are warming up to it. They are syndicating loans at very attractive cost, because this is an industry which is able to give you a 20-year visible cash flow. So once you are operating, it's a cakewalk that you will get into an InvIT REIT. But before that, financing is available. Financing is made available by the banks. Banks are warming up to it. There are banks which have created COEs within their system that this is a sunrise sector, put all efforts to convince the customer to take money from us. So that kind of efforts are being put by the banks also. And it's not only bank, you will see private credit to play a role wherever there will be an equity shortage. A private credit will come in, and maybe the cost will be higher from debt but lower than equity, but they will try to do the bridge financing as well. But as Mr. Ganesh pointed out, that there should not be any period where you are ready but it is not getting used, because this is a capital guzzler. You would have invested like millions of dollars and somebody is not paying you. So the cost increases, the carrying cost increases, and then it eats up into your IRR. So over a period of time, we will see new mechanism, like we spoke earlier, that GPU is something that we don't finance in India. So that is going to be a separate GPU financing which will happen, and banks are gearing up for that, whether they are able to take the technology risk. In US, it happens very smoothly. In India, it will happen soon. Again, on a GPU, why it is important, just to give you a layman perspective. In US, you make a horizontal data center because one GPU might weigh around 2,000 ton. In India, we make vertical structures. So my civil cost will go up because I have to make the slabs which can sustain that kind of load. So people are gearing up. That is like an AI data center, how you make. So costs are going up. You see a supply chain constraint also, where innovative financing is happening, that most of these equipments may come from overseas. So you have multilaterals which are saying that, okay, if the origin of the equipment is from my country, I can give you a better financing over there. So whole ecosystem globally is working, that this capital India needs over next 5 years of around $60 billion, how to get it to India.
Sure. So it would be good to hear your views. We were discussing a while back on the currency parity to kind of manage the contractual obligations. I mean to say, with all the West Asia crisis, I think a dollar versus INR debate of cost versus revenue. It's good to and pertinent to hear your views.
Yeah, sure. So like every year we see that the dollar has moved from, say, like I'll talk about this year, from 90 to 95 when March closed, right? So again, we have lost like 4 to 5%. So if your capital has come from overseas, you will always be like lagging behind on the investment that you made. Certainly the investment cost has gone up because you have a currency loss and you are earning in INR. So the whole industry is working and grappling with this piece, because your smaller customer like enterprise and colo, they would be happy to pay in dollars, but hyperscaler customers are generally not happy to pay in US dollar contracts. So as an industry, we are trying to push forward to that. Otherwise, it's a loss which we have to underwrite and bake it in the model, that you might be losing the currency on an annual basis to the extent of 3 to 4% every year.
Sure, sir. This is quite an interesting area for us to keep an eye on. Moving on to Mr. Devesh Sharma. Sir, from an investor standpoint, what reforms could improve the investor confidence and speed up the access to capital?
So that way, if you look at data center, I think regulators have been sort of, they have been very proactive. Data center has been given a infrastructure status. Data center has also, you saw the latest budget, you had tax reforms coming in. The way I look at what my co-panelists have spoken, and what morning Bimal also was telling me a number which is stuck to my mind. You're talking of a 10 gigawatt of investment, which in a real term would come somewhere between, let's say, 6 lakh crore or 5 to 6 lakh crore. And if you're talking of MEP of that, 4 to 5 lakh crore would just be the MEP. Well, large part of some of these components, rightly as Mukesh said, would obviously come from overseas. But also this requires, it builds a great opportunity for Make in India for some of the smallest vendors. Because see, beyond a point, one has to appreciate that while the tech is one thing, the backend for that will need, you have to diversify your supply chain. You cannot do such large expansion in the country when your supply chain is not able to keep that pace. And because the way I thought what Bimal had said very nicely in the morning, he was saying that in 18 months he was talking of doubling, and I think 2.5 times after next 18 months to 2 years. So that next, while 18 months can still be managed, but after 2 to 3 years, if your supply chain is not large and robust, it will be a challenge. And typically, obviously, I'm sure everybody across the room, a lot of new supply chains, new suppliers, new vendors would be coming on board. One of the challenges which I realize is, especially where you have the new vendors coming in, and with so much of focus on Make in India, is how do you ensure that whatever capex those small vendors do or MSMEs do, how do those instruments become financeable? So one of the things, in my opinion, and that's something, as the financial institutions, the data center operators have to come together, and something like some type of a comfort in terms of operational comfort, if that can be provided to the financial institution by data operators, in sense that, if this SME is manufacturing for me, it's like a take or pay or some type of a agreement structuring which can be done. So there is some amount of structuring which can be done, which will ensure the credit rating of the MSME goes up. So that becomes, it becomes more financeable. Secondly, the rate of interest also sort of brings it down. Because what will happen otherwise, after the 18 months type of thing, your supply chain really will not move up. So I think what we need is the industry, financial institution coming together and seeing how can across the supply chain, especially the last leg MSME, how can we ensure that his thing becomes more bankable or more financeable, and how the cost sort of comes down. So it's important that all the players come together and sort of get this issue addressed. Yeah.
Sure. Thank you, sir. Moving on to Mr. Gupta. So what are the implementation and operational risks do you foresee in development of a large-scale AI infrastructure with the ambitions which has been outlined before?
Sure, I will keep it short. Yes, the energy is the biggest game, whether it's a grid or the transmission availability. Second is energy in terms of the green energy, where exactly the AdaniConneX is playing a vital role in creating the world's largest renewable energy park in Gujarat, which is 30 gigawatt. So we understand this vertical integration is very important, not only from grid perspective, but for the transmission as well as production as well. Second is specifically in terms of the supply chain management. We are pre-planning our supply chain so that whenever we are ready with the core and shell, the right supply chain is in and we are able to deliver. Delivery is a key, most important thing in terms of the hyperscale augmentation in this business. And third is the talent pool, which I described. We are working very hard in creating that kind of a aura in terms of the learnings, and everything goes in accordance to the data center requirements. On the regulatory side, no challenges as such. Government has been supportive in terms of policy amendments, and I think we have a good era of data center boom to be seen in India.
Sure. I think delivery, the word which you mentioned, is paramount, because we are hearing from a lot of state authorities that a lot of underwritten capacity, specifically the power capacity for the AI-led infrastructure, is a point of concern for them. If it is not addressed or if it is not actioned on time, it is actually a cost-benefit analysis to where it would have been alternatively allocated. So I mean to say we are absolutely optimistic about, with the players like each one of you, to be extremely serious about the deployment of capital as scheduled. Just to ease out a room a bit, I will move a little from the intense questions to a small rapid fire. Just a one-word answer. To you, Ganesh sir, what will matter more by 2030? Build faster or build smarter? Just one word.
Smarter itself is building faster. Smarter itself is building faster.
Just one word, sir.
And being relevant to the customer is very important.
Sure, sir. Mr. Soni, AI boom, sustainable shift or a temporary hype?
I think short term you will see some use cases getting spoiled and they may not
So you have to stick
scale
to
up.
one answer.
But in long term, AI is very relevant and it is proven. It will remain.
Sure, sir. It's still two shades to the coin, but we take it. Moving on to Mr. Sharma, one operational risk that keeps investor awake at night.
I'll just say one word: volatility.
Volatility. Okay. Thank you, sir. Mr. Gupta, one word to describe India's next decade of data center growth.
We should be looking at like world's representation of data
Maximum
centers.
3 words, 1 to 3 words.
DR, the biggest world's DR, whether it's West or Asia Pacific.
Okay, we take it. We have couple of them for the audience. I'll take 2.